In the year 1910, a secret meeting between some of the world's most powerful private men took place on the secluded island of Jekyll Island. This is where the idea and the plan to form the Federal Reserve was hatched. This meeting was so secretive that they did not even admit this meeting happened until the 1930s. Now, given the fact that today the Federal Reserve is number one, the most powerful economic decision maker in the world. Number two is not a company. Number three is not a federal agency either. And number four is not accountable to either shareholders or to voters. It leaves the inner workings of the Federal Reserve shrouded in mystery and suspicion. So let's get to the bottom of this. What is the Federal Reserve and who really owns it? The Federal Reserve is the central bank in the United States, but it actually was not the first central bank. In the United States, we have a long history of some founding fathers being absolutely against any central banks whatsoever, and others pushing for the creation of central banks for their entire lives, leading to a total of 3 central banks in United States history. One of the largest opponents to a central bank in the United States was none other than Thomas Jefferson. Thomas Jefferson was extremely opposed to central banking. One spurious quote attributed to Thomas Jefferson is that if the American people ever allow private banks to control the issue of their currency, first by inflation, then by deflation, the banks and corporations that will grow up around them will deprive the people of all property until their children wake up homeless on the continent their fathers conquered. Now, seeing as how the earliest appearance of this quote was from the 1930s, it is clearly not a direct quotation from Thomas Jefferson, but the echoes of this quote appear all throughout his writings and his speeches. He wrote that banking establishments are more dangerous than standing armies, and that the principle of spending money to be paid by posterity under the name of funding is but swindling futurity on a large scale. Now, the reason why Thomas Jefferson and many other founding fathers were against central banking and even against paper currency was because they had already experienced the results of that. The Articles of Confederation granted Congress the control to print money. At one point, the continental currency in 1979 had a monthly inflation rate of 47%. And so in order to stop these mistakes from being repeated, when they wrote the Constitution, which replaced the Articles of Confederation, they took away the power to print money and gave Congress instead only the power to coin money. It was at least in part because of this influence that central banks in the United States were not able to take hold. That is, until the one that was created in 1913. And there's a reason why this one stuck and the last ones did not. But first, a quick word about One Gold, which is today's sponsor, and they are the lowest cost in the industry to be able to buy precious metals like gold, silver, and platinum. Let's take a look real quick and compare the pricing of One Gold versus other retail sellers of gold and silver. The premium for gold at One Gold is 0.8%, which at the current price of gold comes out to about $16 over spot. Compare this to a standard 1 ounce American Eagle, which will run you over $170 above spot. 16 bucks is a heck of a lot better than 170 bucks. Compare this as well to their 2% fee on silver, which at today's prices comes out to about 51 cents. On a standard 1 ounce American Silver Eagle, you're gonna pay $45, which is $20 per ounce, close to a 100% premium. Now, you might be thinking that storing your precious metals in a vault would get very expensive and that maybe doing something like an ETF would be more cost effective. So let's take a look. GLD, the Spider Gold Shares ETF, is the most popular gold ETF, and it has a gross expense ratio of 0.4%. Compare this to 0.12% for the storage fee for One Gold for gold, or 0.3% for silver. In addition, the metal held in One Gold's vaults is fully insured. And once you get to the point where you have more gold or silver or platinum than you want to have in storage, you can always request delivery, which you can't do with an ETF, which means you can build up your ounces for the lowest cost possible. And then once you're ready to exchange it for those coins that you want or those bars that you want, you can do so at a time when the premiums are good for you. And finally, if you live in a state that charges you a sales tax on precious metals, One Gold does not charge you a sales tax when you purchase a vaulted position of precious metals. This allows you to put more of your money at work into the metal itself. I've been using One Gold for years now. I'm a huge fan. I know them, I trust them, recommend them. And if you would like a little bonus, sign up with the link in the description below. So the participants at the meeting at Jekyll Island came up with a plan in order to get a central bank in the United States that would stick. Part of this involved calling it the Federal Reserve so that Americans would be tricked into thinking it was part of the federal government. But it wasn't enough to just call it the Federal Reserve. They did have to have the government itself sign up for it so that it would give it some sticking power. They put these ideas in motion and were able to get Congress to pass the Federal Reserve Act, and President Woodrow Wilson signed it in December 1913. However, over the years, things have changed a little bit, and we know that the way something starts is not necessarily the way it always stays. And so, what is the structure of the Federal Reserve today? Who owns it? Who controls it? And most importantly, who profits off of it? Let's start with who controls it. The Federal Reserve was created by the Federal Reserve Act, an act of Congress, and it could be undone by an act of Congress as well. Not only that, but it can also be changed by Congress as it has before in order to direct what the Federal Reserve does and how it does it. Case in point, in 1977, Congress gave the Federal Reserve the dual mandate. This is the most important point that we will talk about in this video, that the Federal Reserve exists because of Congress, and its job is directed by Congress, and its existence could be ended by Congress. We'll come back to that in a little bit, because just because an entity is ultimately subject to another entity doesn't mean that that other entity dictates every little thing it does. Congress does not dictate every little thing that the Federal Reserve does, especially its most important day-to-day, month-to-month, year-to-year actions, which is governing monetary policy. Monetary policy includes two main things, which is the Federal Reserve's balance sheet and interest rates. Federal Reserve's balance sheet is a total of all the assets the Fed has purchased with money it has printed out of thin air. These assets are mortgage-backed securities and US Treasuries. Federal Reserve also sets interest rates in order to try and influence interest rates of downstream loans across the economy. Now, given the fact that the Federal Reserve controls the dollar and influences the dollar with its monetary policy, and the dollar is the global reserve currency, you'd think that maybe these people making this decision would be subject to voter accountability, but that is not the case. Monetary policy is dictated by the Federal Reserve's Federal Open Market Committee, the FOMC. This committee is made up of 12 members. The 7 members of the Board of Governors of the Federal Reserve System, the President of the Federal Reserve Bank of New York, and the 4 of the remaining 11 Reserve Bank presidents who rotate every year. So we've got a committee here that are the ones deciding monetary policy for the most powerful currency in existence today. This committee is made up essentially of 2 groups of people. One of them is the Board of Governors, and the other is Reserve Bank presidents. So who are these people and where do they come from? The Board of Governors is appointed by the President of the United States and confirmed by the Senate. Now, these terms for the Board of Governors are 14 years long, and they terminate every couple of years so that they don't coincide with US presidential elections. That way, any one president is not going to be able to stack the deck in his favor, and they're just going to have to replace the ones that come up for reappointment. But the President of the United States and and confirmed by the Senate, so Congress, are the ones who choose the Board of Governors. And the Board of Governors make up half of the FOMC, the people who decide monetary policy. But what about the other half of that committee? The Reserve Bank presidents. Who are those people? The Federal Reserve has 12 regional federal banks located in Boston, New York, Philadelphia, Cleveland, Richmond, Atlanta, Chicago, St. Louis, Minneapolis, Kansas City, Dallas, and San Francisco. These district banks oversee all of the banks in their district. The board of directors for these regional banks are elected by the member commercial banks. Okay, so we've got the 12 district banks. The board of directors is chosen by the member banks. But how do those elections happen? Who gets how many votes? And who chooses the candidates? Well, the fact is these 12 regional banks are set up in a similar way to private banks, which means these district banks actually have shares. And in order to be a bank under a district, by law, you have to own shares in your Federal Reserve District, the regional bank. However, owning Federal Reserve Bank stock does not give you the same rights or privileges that owning stock in a private company give you. These shares can't be traded, they can't be sold, they can't be shorted, and they can't be used as collateral for loans, and they don't give you voting rights the same way shares in a publicly traded company do. Why in the world do they have to own these shares then? If it doesn't give them voting rights, they can't sell these shares, what do those shares do for them? Well, first of all, that is how the original funding came to set up these 12 reserve banks. Each bank gets one vote regardless of how many shares they have, and some banks have a ton of shares. Thanks to a Freedom of Information Act by Institutional Investor, Federal Reserve Bank of New York released the capital stock holdings and showed that Citibank held 42.8% of the total shares, while Chase held 29% of the total shares, which highlights an important fact. Individuals cannot own shares of these banks. Only banks can own shares of the Federal Reserve banks. What's odd here is the candidate selection usually presents only a single candidate for each director, which means some big banks that have lots of shares of their reserve banks may be playing a key role behind the scenes in selecting those candidates. So yes, every bank who, because you're a bank, you've got to own shares of your reserve bank. Every single one of those banks does get a vote on which candidate becomes the director or the president of their reserve bank. But how much does that vote really count when there's only one candidate to begin with? So let's sum up the organization structure here before we move on to the final piece, which is profits. Federal Reserve exists because of Congress. The Board of Governors is appointed by the president, confirmed by the Senate. The Board of Governors is on the FOMC, which dictates monetary policy. The other part of the FOMC is made up of the presidents, some of the presidents of the reserve banks. Those presidents of the reserve banks are voted into their positions by the member banks, although it looks like they might be just chosen anyway by the bigger banks because they're usually the only candidate. And finally, the profit. Who is making money off of this? There are two main recipients of profits in the Federal Reserve System. The shares pay a dividend of 6% or the lesser of that and the high yield of the most recent 10-year treasury. So not individuals, but the banks receive a 6% dividend. Now, 6% is not a lot. So where does the rest of the money go? After the Federal Reserve finishes paying for all of its expenses, like its buildings, keeping the lights on, employing the thousands of PhDs who have never worked a real job in their life, they send the rest of the money over to the Treasury. That's right, the Federal Reserve, if it has any profits left over after paying those dividends and after paying out all of its salaries, all of its expenses, it takes that money and sends it over to the federal government. Now, normally that amount that it profits and then sends over back to the federal government is fairly large. much, in the neighborhood of billions of dollars every week. But remember this thing, the Federal Reserve's balance sheet? That's basically all their assets that they own, and those are a big pile of very low yielding bonds, meaning that right now the Federal Reserve is not making any profits. Yes, they're still paying out their dividends. Yes, they're still paying their expenses, but they're not having anything left over right now, which means no, they're not sending anything to the United States government. This means that source of funding that the federal government has relied upon from the Fed is no longer there right now. It'll be quite some time before the Federal Reserve is profitable enough to start paying the government again. That's because ever since the number went negative, meaning the Federal Reserve was not profitable, they're printing money to make up all of their losses, which means once they're profitable again, they have to come back to black before they start paying the government again, meaning all that money that they printed to fund their expenses, now that's just a big old IOU to themselves, so that once they're profitable again, they still don't start paying the government until they've paid themselves back for all the money they printed to pay for their own expenses. At the end of the day, it is a somewhat complex nest of webs in terms of who owns what and who controls what and who is making what decisions, but nothing is shrouded in absolute secrecy anymore. There are some things that are still hidden behind the curtain, but given what we know about how the Federal Reserve operates, and given what we still don't know, we have enough to say we should be ending the Fed. And remember at the beginning when I told you that this was all about Congress, that Congress started the Federal Reserve, they've amended the Federal Reserve Act, they continue to allow the Federal Reserve to exist, and at any point in time, they could end the Fed's existence. Heck, even amend the Federal Reserve Act yet again to restrict what the Fed can do in terms of controlling monetary policy, making them more accountable, having more oversight, or how about even auditing their balance sheet. Yes, at the beginning, the Federal Reserve was a creation, a creature of private individuals, bankers at Jekyll Island. But the responsibility for the Federal Reserve that we have today is 100% on Congress. And if we have any hope of going back to the founders of this country's vision and not having a central bank, it's going to be because of Congress as well. As always, really appreciate you guys. Thank you so much for watching. Have a great day.